If you were to take two countries, country A and country B, and gave them identical conditions, but country B was blessed with a mountain of oil beneath its surface, who do you think would be richer? That's why it was surprising to me that country B, Algeria, has roughly the same GDP per capita and level of development as Morocco. I dove in and researched the history to find out how this could be. Algeria didn't use the oil to turn itself into a Dubai or a Saudi Arabia. So what actually happened that kept them poor? The early part of their modern history seemed bright. From the mid-60s to the mid-1980s, Algeria transformed from an agricultural state into a burgeoning oil export powerhouse. Cooperation agreements were even signed with Algeria's former colonizer, France. And this helped them accelerate and more rapidly develop the oil and gas industry, the export of which grew Algeria's economy exponentially. Per capita GDP increased by 1,000% in just 15 years, with Algeria ranking 45th in the world by 1985, wealthier than countries like Argentina, Taiwan, Brazil, and South Korea. Algeria's economy was booming, and the trajectory only seemed to be upwards. In 1971, the nascent hydrocarbon industry was nationalized. This was a policy also adopted by many other oil-producing countries at the time, and it helped to bring revenues fully back into the state instead of being sent offshore. However, the strong performance was very quickly about to end. Algeria had failed to build strong support foundations for itself. For the exact same reason that many Western countries, like America, Britain, and France, struggled with high energy prices in the 70s, high global energy prices were at first a massive boost for petrostates like Algeria. Alarm bells rang starting in mid-1985, when there was a steady decline in the price of crude oil that abruptly accelerated in 1986 into a full-blown crash. The price crash revealed the fragility and systematic dysfunction that the petroleum-based growth model was built on. The largest problem was debt. Algeria had levered up and taken lots of debt during high oil prices to satisfy a higher standard of living for its people. Obviously, this was extremely popular at the time, as oil revenues were directed into the state, and the state redistributed those revenues in the form of lavish state salaries, subsidized fuel and food, social housing, and welfare. When oil prices fell, Algeria was left with staggering amounts of debt that it had to service, despite state revenues dropping like a stone. Debt servicing during the period of 1989 to 93 amounted to a crippling 70% of Algeria's state spending. In 1980, the per capita income of Algeria was almost 20% of the United States. By 1995, it had dropped to almost 5%, really showcasing Algeria's structural decline in relation to an advanced economy. Algeria also suffered from so-called Dutch disease during this period. Because the hydrocarbon industry had boomed and become such a large portion of Algeria's activity, all other sectors of the economy, like food production, metals, and pharmaceuticals, suffered as the state only poured resources into hydrocarbons. The analysis of the structure of the Algerian economy demonstrates a strong dependence on this rent. When we say the Algerian economy is a rentier economy, it means that oil revenues provide essentially all of the country's currency, by which the rest of the economy is basically entirely internal, meaning services between people. Government employees are paid wages generated from oil and gas, and they spend those wages on services, and literally the entire economy feeds off of this trade. It's kind of like oil trickle-down economics. It's all run from the top down, rather than how most economies work from the bottom up. But really, there's one source of income. One. When hydrocarbon revenues dropped, there were no other diversified industries to support the economy and pick up the slack. On top of all this, Algeria's centralized planned economy was ill-suited to absorb the shock. Small attempts at reform were half-hearted at best. Algeria would suffer from years of turmoil in the late 80s, anti-government protests, riots, and frustrations. Then in 1992, the unthinkable happened. The turmoil of the late 80s allowed popular Islamist ideas to take hold amongst the country's conservative, working-class majority. People who were frustrated with the economy, with the top-down authoritarian government, and even with secular society. The single-party socialist state bowed to pressure, allowing other political parties to exist, along with the first multi-party election since independence. The election returned a near majority for the Islamic Salvation Front, a political party advocating for Islamism and Sharia law. This election result and potential turmoil pushed the military to overthrow the ruling Socialist Party in a coup before the second round of elections. What followed was a brutal civil war that lasted almost the entirety of the 90s. Algeria's military effectively ran the country at this time. The total autocratic control that they had allowed them to push through many free market reforms and liberalize trade regulations to try and fix the mistakes of the 70s and 80s. They also rescheduled debt repayments with creditor countries to survive during the war. Most importantly, they managed to keep the export valves and the hydrocarbons flowing to provide a steady stream of revenue during the whole war. In fact, hydrocarbon production continued to climb during the war. Ultimately, Algeria survived the civil war with its economy stagnating and even growing a little during the late 90s. As civil wars go, that isn't that bad of an outcome. Look at the GDP per capita graph for Syria. When the war in Syria began, their country's economy tanked. They were on basically the same economic trajectory as Turkey throughout their modern history. Except now, Syria has less than 1/20th of the per capita GDP of Turkey. It's a complete disaster. To Algeria's credit, they managed to avoid this kind of catastrophe. Global oil prices again rose during the 2000s, massively boosting Algeria's economy again. To avoid the mistakes of the past, Algeria's authoritarian government identified some main policies. No political opening. Political opening led to strife. Authoritarianism was here to stay. Diversify away from total reliance on the state oil and gas industry. That much everyone knew. And do not take out massive amounts of debt while having a volatile income source. The higher prices allowed the government to repay much of their foreign debts, and even build up over $200 billion in foreign currency reserves, which was all definitely a good thing. However, it also allowed them to greatly expand social spending again to a population looking for good news in the aftermath of a terrible war. Algeria's new economic model sees energy dependency unsustainable. The government recognized that the increased petroleum-based welfare spending was a problem, but didn't do a whole lot to fix it. Imports rose massively during the late 2000s and early 2010s, but all while oil exports stagnated or even decreased. The result was a balance of trade that went from a strong surplus to only a very moderate surplus. Some reforms were introduced for Sonatrach, the Algerian state oil company, to force it to compete with international companies. However, the reforms were quickly reversed just a year later. Rather than continuing with liberalization, the Algerian government doubled down on state control of the sector. Very well-paid public sector employees and the large bureaucratic class resisted attempts by the government to push through reforms, leading to massive issues with corruption and bureaucracy. This also means that Algeria can run itself in a more or less isolationist way. That's good for political repression and keeping authoritarian control. However, if your people can't connect with the world and found businesses, how are they going to build complex supply chains? And how are they going to develop the economy from the bottom up? Like Morocco, for example. I mean, Morocco is deeply integrated with Europe. You know, Morocco is at the bottom of tons of European supply chains. In 2014, global oil prices abruptly fell again.
And right now, it is unclear how long OPEC's nerve will hold.
Hydrocarbon revenues fell 43% for Algeria in just a year. And the country again entered a long period of economic struggle that's more or less lasted to this day. In essence, many mistakes of the first boom weren't fixed. Algeria ended up suffering from a lot of the same problems that it already went through in the period before its war. After understanding this history, let's look at the biggest problems facing Algeria today. Depending on your source, Algeria is either the second or the third highest spender on the military in terms of percentage of GDP. It's like a wartime economy. I believe that this is tied to the traumas of the 1990s Civil War and the government's need to control its citizens. In addition, the lingering trauma of the Civil War, which began as a popular movement for political and economic reforms and ended in widespread bloodshed, hinders reform. Algeria's elites are likely anxious about avoiding a situation like Syria's. Algeria is also currently in a protracted cold conflict with neighboring Morocco, which doesn't help reduce defense spending. Spending on military equipment is almost always going to be a net negative on your economy. Or in other words, you spend money for arms, hopefully don't lose those arms during their life cycle, and then retire them once their use is up. However, unlike a nation like America, Russia, or France, Algeria has very little indigenous defense industry. Spending doesn't go into domestic producers or factories and local wages. Instead, it often leaves the country entirely. The two main suppliers of Algeria's military have been China and Russia, as well as Russia's predecessor, the USSR. Even if it does go back into the country, if wages are disproportionately higher to attract better talent, it can have a really negative effect on the labor market, drawing away workers from more productive industries and fueling inflation. We made a whole video about how this is happening to Russia's war economy recently. Another major issue is that Algeria has a literacy problem, but really only with the older generation. There's an absolutely massive divide between the older and the younger population. Amongst people over age 65, Algeria has one of the worst literacy rates in the entire world, coming in at lower than nations even poorer than Algeria, like Pakistan, India, Nigeria, and the Democratic Republic of the Congo. In and of itself, that doesn't necessarily condemn your country to being poor. Other fossil fuel reliant countries like Oman and Saudi Arabia also suffer from that problem, and they're very far from poor. However, Algeria's population is quite large. The good news is that the young population is far larger than the older population. They are literate and increasingly skilled. The bad news, though, is that the government has so far been deeply unsuccessful in diversifying, meaning the country has yet more people who have to live off of the top-down rentier system, and does not provide a sustainable long-term future. Even if people get educated and skilled, the economy can't absorb them into productive industries. This forces them to either be underemployed or even emigrate to countries like France. The second oil boom allowed Algeria to invest in human capital, things like literacy, that will allow them to liberalize and build a more diversified economy in the future. Probably the biggest problem, though, is corruption and big state bureaucracy. An emblem of that corruption is with the East-West Highway project, an ambitious effort to connect all of Algeria's major population with one central hub highway. In the end, the project went billions and billions of dollars over budget and took way longer to complete than expected. It's not a good signal for a country trying to run an efficient state-led system, as awkwardly, all of the blame for that basically falls on the state for planning, conducting, and executing everything. The nature of being a top-down rentier economy usually means a large state bureaucracy, people with inefficiently allocated state jobs that are not suitably productive and don't have great incentives to change. Revenue windfalls from hydrocarbons have been able to mask the mismanagement and inefficiency of the Algerian political economy and its energy sector. It's important to not become a state that depends entirely on unstable revenue streams for daily survival. In Algeria, market reforms happened too late and are still problematic today. There's a lot of anxiety that opening up the economy could lead to political changes, or that political liberalization might repeat the troubles of the 90s.